For decades, the US dollar has reigned supreme. It is the world's reserve currency. But cracks are appearing in this dominance. A new bloc of nations is challenging the established order. This bloc, known as BRICS, seeks to reshape global finance. Their weapon? A new payment system. This system aims to diminish reliance on the US dollar. It could have far-reaching consequences. The world watches with bated breath. Is this the beginning of a new financial era? BRICS is an acronym representing 5 major emerging economies. These are Brazil, Russia, India, China, and South Africa. Together, they represent a significant portion of the global population and economic output. BRICS nations have increasingly asserted themselves on the world stage. They are united by a common goal: to challenge the dominance of Western-led institutions. The new payment system is a key part of this strategy. It aims to foster greater financial independence for BRICS and other developing nations. The BRICS initiative did not emerge overnight. It is rooted in growing dissatisfaction with the US dollar's hegemony. Many nations perceive the dollar's dominance as a tool of economic pressure. Sanctions imposed on Russia following the annexation of Crimea fueled these concerns. The use of the dollar in this manner has made many countries wary. They seek alternatives to reduce their vulnerability. The BRICS payment system offers a potential solution. It allows nations to bypass the US-centric financial system. The BRICS payment system is built on 3 key pillars. First, a unified payment platform. This platform will streamline transactions between BRICS nations. It will reduce reliance on SWIFT, the Western-dominated messaging system. Second, a new digital currency. This currency is expected to be backed by a basket of BRICS currencies and possibly gold. This will provide stability and reduce dependence on the fluctuating dollar. Finally, distributed ledger technology. DLT will enhance transparency and security within the system. A dollar demoted, potential implications for global finance. The implications of the BRICS payment system are profound. The BRICS nations, Brazil, Russia, India, China, and South Africa, are exploring alternatives to the US dollar for international trade. This move is driven by a desire to reduce dependency on the dollar and to shield their economies from US monetary policy fluctuations. By creating a new payment system, these countries aim to facilitate smoother and more secure transactions among themselves, potentially bypassing the dollar altogether. It could erode the US dollar's status as the global reserve currency. The US dollar has long been the cornerstone of global finance, serving as the primary currency for international trade and investment. However, if the BRICS payment system gains traction, it could challenge the dollar's dominance. This shift could lead to a more multipolar currency system, where multiple currencies share the role of global reserve currency, reducing the dollar's influence. This would have significant consequences for the US economy. The US benefits immensely from the dollar's reserve currency status, which allows it to borrow at lower interest rates and finance its deficits more easily. A decline in the dollar's dominance could lead to higher borrowing costs for the US government and businesses, potentially slowing economic growth and increasing the national debt. The dollar's dominance allows the US to borrow cheaply and finance its deficits. This advantage stems from the high demand for US dollars and dollar-denominated assets, such as treasury bonds, by foreign governments and investors. If the demand for the dollar decreases, the US may face higher interest rates on its debt, making it more expensive to finance government spending and investment. A decline in the dollar's status would diminish this advantage. The US could experience reduced economic leverage on the global stage, as other countries may be less inclined to hold and trade in dollars. This shift could also impact the value of the dollar, leading to potential depreciation and increased volatility in currency markets. It could lead to higher interest rates and inflation in the US. As borrowing costs rise, the Federal Reserve may need to adjust its monetary policy to manage inflation and maintain economic stability. Higher interest rates could slow down consumer spending and business investment, potentially leading to a more sluggish economy. This would have ripple effects throughout the global economy. A weaker dollar could alter trade balances, affect global investment flows, and create new dynamics in international finance. Countries that rely heavily on the dollar for trade and reserves may need to adjust their economic strategies, leading to a period of adjustment and potential instability in global markets. a multipolar world order shifting sands of geopolitical power. The BRICS initiative signals a broader geopolitical shift. The world is moving towards a multipolar order. For decades, Western institutions have dominated global finance. The International Monetary Fund and World Bank are prime examples. The BRICS payment system challenges this dominance. It offers an alternative to the existing order. This has resonated with many countries in the global south. They see it as a way to level the playing field. Obstacles in the path navigating challenges and risks. In this section, we will delve into the myriad of challenges and risks that the BRICS payment system faces. From technical hurdles to geopolitical resistance, the path is fraught with obstacles that need to be navigated carefully. The BRICS payment system faces several challenges. Technical hurdles are significant. Engineers and IT professionals are working tirelessly to ensure the system's robustness and reliability. The complexity of integrating different technological infrastructures from 5 diverse economies cannot be understated. Each country has its own set of standards and protocols, making the task even more daunting. Integrating the financial systems of 5 diverse economies is complex. Financial analysts are constantly working to harmonize the various monetary policies and regulations. The differences in economic structures and financial regulations among BRICS countries add layers of complexity. This integration requires meticulous planning and coordination to ensure seamless transactions across borders. Ensuring interoperability and security will be crucial. Cybersecurity teams are on high alert to protect the system from potential threats. The risk of cyber attacks is ever present, and robust security measures are essential to safeguard financial data. Interoperability between different systems also poses a significant challenge, requiring advanced technological solutions to ensure smooth operations. Geopolitical resistance is another obstacle. Diplomatic tensions and political disagreements can hinder the progress of the BRICS payment system. Each member country has its own geopolitical interests, which may not always align. Navigating these political landscapes requires diplomatic finesse and strategic negotiations to ensure cooperation and mutual benefit. The United States is unlikely to cede its financial dominance without a fight. The U.S. has a vested interest in maintaining its position as the world's leading financial power. Any attempt to challenge this dominance is likely to be met with resistance. The BRICS countries must be prepared for potential pushback and develop strategies to mitigate any adverse effects. Retaliatory measures such as sanctions or tariffs are possible. The introduction of the BRICS payment system could lead to economic retaliation from other global powers. Sanctions, tariffs, and other trade barriers could be imposed to undermine the system's effectiveness. It is crucial for BRICS countries to anticipate these measures and develop contingency plans to counteract them. Internal trust issues within BRICS also pose a challenge. Building and maintaining trust among BRICS countries is essential for the success of the payment system. Historical tensions and differing national interests can create friction. Continuous dialogue, transparency, and mutual respect are key to fostering a collaborative environment. Overcoming these obstacles will be essential for the system's success. The journey is undoubtedly challenging, but with determination and strategic planning, the BRICS payment system can achieve its goals. By addressing technical, financial, geopolitical, and trust-related challenges head-on, the system can pave the way for a more integrated and resilient global economy. A glimpse into the future, prospects and timeline. The future of the BRICS payment system remains uncertain. Discussions among BRICS central banks are ongoing. A potential rollout is expected in the near future. However, the exact timeline remains fluid. If successful, the system could strengthen trade within the bloc. It could also foster greater cooperation among developing nations. The initiative aligns with projects like China's Belt and Road Initiative. These developments have the potential to reshape the global economic landscape. A new dawn or false start. Concluding thoughts. The BRICS payment system is a bold and ambitious project. It aims to create a new financial architecture that can rival the existing systems dominated by Western powers. This initiative is not just about economics. It's a statement of intent from emerging markets to assert their influence on the global stage. It reflects the changing dynamics of global power. The BRICS nations, Brazil, Russia, India, China, and South Africa, are no longer content to play second fiddle. They seek to reshape the financial landscape to better serve their interests and those of other developing countries. The initiative has the potential to disrupt the existing financial order. However, significant challenges remain. These include regulatory hurdles, technological integration, and geopolitical tensions. The success of the BRICS payment system will depend on the ability of these nations to navigate these complexities. Whether it succeeds or not, the BRICS initiative is a sign of the times. It underscores the shifting balance of power in the world. Traditional financial centers like New York and London may soon find themselves sharing the stage with new hubs in Shanghai, Mumbai, and Sao Paulo. The world is moving towards a more multipolar system. This means that power and influence are becoming more distributed rather than being concentrated in a few hands. The BRICS payment system is a key manifestation of this trend, representing a collective effort to democratize global finance. The BRICS payment system is a key manifestation of this trend. It aims to provide an alternative to the SWIFT system, which has long been the backbone of international financial transactions. By doing so, it hopes to reduce dependency on Western financial institutions and create a more balanced global economy. Its progress will be closely watched in the years to come. Analysts and policymakers around the world will be keen to see if the BRICS nations can overcome their differences and work together to build a robust and reliable payment system. The outcome will have far-reaching implications for the future of global finance.